Hello and welcome to Market Call tonight. Thanks a lot for joining us. We will show you the ways to reach us to pass along a question to David Burrows. North American Large Caps is the topic, as mentioned. Email address is on your screen there, marketcall@bnn.ca. There's the toll-free number, 1-855-326-6266. You can tweet us as well at Market Call. Good to see you, sir.
Great to be here.
So how are you viewing the markets now? How are you viewing the world through your lens over at Barometer?
Well, it's interesting. You know, you go through periods where there's a lot of change and a lot of transition, and then you go through periods of time where there's some fairly steady leadership. And really, for about a year now, we've had very steady improvement in breadth in the market, meaning more and more stocks are slowly participating. We see a very healthy environment. When you look at the alternatives, where you put your money, you've got a 2.5% 10-year Treasury bond, or you've got the average stock in the S&P, which has an earnings yield of somewhere north of 7. So you get paid very well to take equity risk today. And unless you think rates are about to really shoot higher, which I think there's very little sign of, equities are probably the place to be focused, and there's some very clear themes in place in the market.
One of your big themes for a long time now, David, as viewers know, is energy. Has that changed at all?
No, and in fact, our energy exposure has been going up through the year. For about 4 years now, we've been very focused on energy infrastructure, a pure beneficiary of the rise in volumes. But in the last 6 months, we've really extended our exposure through the producers and the service companies, because frankly, it's not so much a story about the price of oil, but just a boom in volumes and falling cost of finding and lifting new reserves. So the cost to find and lift new reserves has fallen about 12% a year for the last 4 years. And so they're just mass manufacturing energy in the U.S. right now. It's just simple U.S. ingenuity. And a lot of companies are benefiting. So we're in our equity portfolios about 40% in energy across a broad spectrum of different themes.
So the producers, infrastructure,
service companies, equipment, some of them are yield producing. Of course, the natural gas companies are doing a lot better for the first time in a long time. So that is a newer theme for us. And then the growth producers in the southern states. So there's quite a lot of opportunities, and I think the net of it is the cash flow generation is growing, and the cost to bring on new reserves has come down to such a level that this is just a good margin business.
Technology is always racing forward. Are you finding opportunities in that sector?
Yeah, so energy, one secular theme. As a play-off of energy, industrials in the U.S. are doing particularly well. I think it was missed by a lot of people. Sasol out of Europe announced 2 weeks ago they're going to build a $22 billion industrial city in Louisiana to take advantage of cheap gas prices in their chemical facilities. 7,000 new jobs. So industrial technology companies are doing well. And of course, as companies are slowly spending, they will spend for productivity. And there's a lot of technology companies that are playing off that. Financial services had a lot of money to spend in technology from pent-up demand. So there's a number of key themes right now.
All right, David, a short pause here. We'll get straight back to the questions on North American large caps for David Burrows.